Hello and welcome to another update video about Bitcoin. Bitcoin continues to do its choppy price movement. At the moment, we can't really say anything specific about how this is going to turn out further. We need to see the breakout of the range. My expectation currently is that we will see another dip here. Now, it's not guaranteed. We've already come down quite low in this correction to the downside in this wave C of a wave 2. In the bullish scenario. However, the bearish wave count is quite similar. Also here we could expect another dip just purely because of the structure, because Bitcoin is very weak at the moment. Yeah, it's just moving in the sideways range. I mean, these ranges are normal in markets. This is when people get frustrated. This is when people leave the market. But actually, if you're a range trader, as I said already yesterday, you can trade this range, you know. And only when you break out of the range, then you know the next moves really. So in these kind of accumulation phases, and we are currently in an accumulation phase in my opinion, where people are accumulating long term, you know, we see whales accumulating, especially the dips at the moment. There has been some data on that. And you know, in these accumulation phases, there are a lot of buyers, a lot of sellers making different decisions. That creates this choppy price movement structure, and a lot of people get caught out here. But what you need to understand, this is normal, especially in an accumulation phase, because there are buyers who accumulate the dips, there are sellers who sell at the peaks. You know, this is a completely normal price structure, and only really when we see a significant breakout, then we have further development in the chart. Therefore, in these accumulation phases, it's best to drive on site. I know that's not always the most popular statement here, especially as a lot of you want to know, you know, what sort of are the next price targets. But sometimes when you have fulfilled all requirements in a correction, I mean, Bitcoin has done this, yeah. Everybody who's been with me for 10 months or more will know that we talked about the current price ranges already in November. And for me, the agenda was we have to come down lower, we have to come down lower, we have to come down lower. Even in May, June here, I told you still we will see another dip, which we did. I was very convinced of that. Yeah, obviously you can go back to the videos at the time if you want to, but here we had not yet fulfilled the minimum requirements to complete this correction. Here we have, in this entire scenario here, we have fulfilled all the minimum requirements to complete this correction. Does it mean Bitcoin needs to go up now? No. It just means it can. Yeah, here it couldn't really, and here it couldn't really, and here it couldn't really. Yeah, so we have a higher level structure that required Bitcoin to come down to this level, and therefore I'm also investigating the bullish case, because it is possible for Bitcoin to complete the correction and to start moving from here. And we see that there are a lot of conflicting forces at play because of this choppy price movement, and we have a very long sideways move now. Yeah, this is comparable to what we had here between January and April. The difference though is that back here it was a very clear three-wave move, and the difference is as well that back here we hadn't fulfilled the higher level wave count requirements to complete the correction. These are completed. Now, of course, it could mean Bitcoin will dip a bit more. Yeah, of course it can. Therefore, I give the bearish case a 40% probability. Maybe I should give it more, but I'm currently staying with my view that the bulls can defend the bullish scenario above 18.9k. In the end, it doesn't really matter what kind of probability I give. What you need to know is that as soon as we drop below 18.9k, we're gonna see much lower levels, and we can probably scrap the bullish case here, because the 18.9k level is such an important level. Now, if we take a look at this scenario here, where we had a 1-2, another 1-2 pattern, a 1-2 and another 1-2 here, with a wave A, B, C in between, then we can also calculate a target for the wave C to the downside by taking the length of the wave A, adding it to the beginning of the wave C, and you can actually see that the 1.618 of the Fibonacci of the wave C, which is basically the maximum a wave C should do, is the $19,450 level. Now we reached that already. That means the very long-term requirements to complete this correction are complete, and also here the short-term requirements to complete this correction are complete. This means we could still dip a bit lower, yeah, but we don't have to. Now the problem is though that Bitcoin is just moving sideways, doesn't really come off the ground. That for me at least makes me consider that we will see one more low here. We have to be ready for that, maybe just below 19,500 in that region between 18.9k and 19.5. Yeah, and only if we drop below 18.9 I will move towards the bearish scenario. Now this is where we are. Not a lot of price movement, we're sort of trolling along here, but we are getting closer to the weekly candle close, where we always see a little bit of more volatile price movement. Be aware that we are now moving here in an basically a larger triangle. That's how you could see it. Maybe this will evolve to something like a descending wedge, but overall it is a broad range and there's still massive space until we get here into the apex. So that could take a while, to be honest. It could do that, but therefore these levels are so important. To the downside 19,500 and then the 18.9k level, and to the upside here the 20,570 level, very relevant. In the short term I would expect another dip, yes, and then a larger recovery. Again, we don't need that additional dip, which makes it so difficult at the moment, but these are the key levels that you need to know. What else do we need to see? I think one more aspect where we can take a look at is the EMA Ribbon, which is the exponential moving averages here. The 1 hour is probably not that meaningful, but on the 4 hour you can see how this is currently keeping us down, pushing us down. Really only a break above that EMA Ribbon will push the price higher, will be a buy signal, and you can see how relevant then that descending trend line is that we've drawn in here, because only a breakout above the trend line would basically go along with a break above the EMA Ribbon, and then also along with that 20,570 level. And then if we take a look at the VPVR, where do we have it? It's gone, so let's just add that to the visible range volume. So, and then we go to the 1 hour. Sort of shows as well that there is a lot of resistance here in that area around 20,000. Yeah, a lot of area of, big area of trade, a lot of stuff happening here, which makes it again difficult to push higher from there. And should we really go any lower, and unfortunately I just need to go back to the settings. You can, by the way, with that VPVR, with those huge blocks that you can see here, you can make that actually smaller. So go to 100 row size, and then here 200 is the volume. So let's take a look at that. And yeah, you can see that in the longer run here you have this whole spike, which makes it currently so difficult for Bitcoin to move higher. On the other hand, when we then finally make it above that $21,500 level here, that spike, that should make it easier again for Bitcoin to rise higher all the way up to 25k. So there's a huge area of resistance just above us, which again makes it so difficult at the moment for Bitcoin to really push higher. One more thing to mention here really is the whole, the volume spikes basically. So what you can really see here, and also that is also why I often say that this entire rally here was just a corrective rally. That is sort of the long run here, where from July to November 2021, this was clearly for me a corrective wave, not an impulse. Yeah. One reason for that is we take a look at volume. This increase was not carried at all by volume, whereas this one was. I think we talked about that before. This one as an impulse to the upside, a wave 1, and now here the wave 2 to the downside might be complete, might extend a little bit lower in the bearish scenario if we drop below 18.9k. But we came down here, obviously this is when volume decreased, yeah, and in that whole period here in this so-called bear market, in which I would include this November high, this was not carried by volume at all. Even here this spike, volume was quite low. But now when we hit those significant lows here, volume is picking up. At least we had a few volume spikes where there were investors, buying as well here. So a few volume spikes. just the signals that those people, investors, traders, whales, whatever, they are buying these dips, and you get those volume spikes when you get into interesting areas of trade and accumulation. Now this is not continued yet, but ultimately what we need to get to those volume spikes where the price increases are carried by the volume. We don't really see that yet, but it has picked up here for the first time really in May in this whole bear market. Yeah, those have been the two biggest spikes really since May 2021, and that was a huge red spike. But yeah, so I think we're getting close here to the low anyway. But of course we could go lower. Certainly in the first instance, if we lose the 18.9k level to 16.9, that is the 78.6% fib level. And if we lose this into the region between 14 and 16k, we talked about that in the previous videos. But for now we are holding, and at the moment just need to wait for the market to decide in which direction we're heading. A lot of uncertainty also in the US, obviously on Monday, a bank holiday, so it will be a quiet day anyway. All right, so hopefully you liked the update about Bitcoin. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.